Hey, good morning. Just doing up some charts of quarter end stuff I do not look at very often, like really rarely, but I thought it might be a good exercise because we can see some strong quarter end candles, and then I look at the monthly and the weekly, and they're way too big picture, so it's not actionable from a daily perspective, but it does give a really good look, I think, of how extended the market is. And I want to show what I mean by that. So now that we have Q1 over, we definitely have opened strongly for April, which I wrote about last week. And definitely gamma is positive. Fed flows are definitely positive. Buying mortgage-backed securities, repo, all the stuff that is, infusing liquidity into the banks and into the market, finds its way into the market, is still positive. And Barton Wang, by the way, is going to be on Thursday to talk about what does that mean? What does the Treasury General Account and what's QT and QE have to do with all of this flow of funds in the plumbing? And we're going to talk about the plumbing on Thursday. Stimulus bills, which this morning there's another announcement that Dems can squeeze another stimulus bill this year in infrastructure, 2.2 trillion. This is like wow, but basically they don't have the need to have Republicans on board. They can just push it on through, with Harris being the deciding vote, tie-breaking vote. So anyway, I'm looking at these charts going, okay, I understand we've got everything lined up. Lots of money in the system. CTAs are positive. Charts look technically still pretty good, but vulnerable. And definitely, VIX falling back down to pre-COVID lows. Dollar stabilizing. I mean, obviously, $93 dollar is not so scary. Even 95 is not scary. It's once it gets above 95 bucks. And we're just still chopping about in, this low area of dollar stabilization. So same thing with yields. Consensus says the market doesn't get scared until it gets above 2% in a 10-year, because that's where we were pre-COVID. And, we had 3% back in 2018. So between 2 and 3, we should definitely see some volatility. But for right now, consensus is don't worry about it. So this is how I'm looking big picture at some of the reasons and more. I didn't even, list them all, why the trend continues to be positive, but the bearish stuff is definitely EMA related. In other words, we are wicked extended from our kind of key moving averages, and it's a reversion to the mean trade in the making. But it hasn't, attempted to do so. And both value and momentum, not just value. And by the way, I like both. Everything looks really good. We had that nice impulse last week into momentum stocks. I mean, that was awesome. Big tech made a big comeback. And it wasn't, that was Wednesday morning. I just said that looks like it's going to trigger next. The ARC trades, the top 10. Nothing but, I don't like the China ADRs, but otherwise, beautiful. All right, so stronger yields, yes, that'll be a catalyst for lower. Stronger dollar, yes, that'll be a catalyst for lower. But right now, they are just, still accepted. We definitely have some quantitative tightening going on around the globe, slowly but surely. Brazil, even China is not letting their banks loan anymore. No more unsecured loans. They're like trying to tamp down speculation in the real estate market, which, by the way, we have our own. Canada has theirs. It's insane. So inflation is definitely a concern, and countries are already starting to jump into this rate hiking theme. Yellen and Biden talking yesterday about higher corporate income taxes, not quote unquote personal, but it's going to bleed down into higher inflation, which is a tax. And then corporations, definitely big tech, are going to be in the, on the dartboard. So I'm looking at this going, yes, that's a concern for tech, which is why I wanted to take big picture, kind of timestamp it, if you will, right? So we just got the week going of the new month of the new quarter, and I wanted to timestamp it. So anyway, I still think we're going to have some volatility come in, and we could actually have some volatility for a quarter or two. But here's what I did: quarter, monthly, weekly. And usually I have hour, day, weekly. So I really pulled back. And I look at these every quarter, just FYI, again, for that kind of consensus of, yep, we're still in trend. And what's interesting to me, oops, there we go, is this, by the way, is a quarterly. So, when we finally did the pre-COVID thing, that was a huge bearish engulfing, right? And then we had the inside week, and then we broke out. That was very bullish above 3,200. We came back down and tested that 3,224, and then we needed to break higher. We got above the black line. Anyway, I do yearly, quarterly, monthly. That happens to be a monthly. And here we are above this trend line, or kind of sort of wedge, but not really. Wedges aren't very accurate on a time frame like this, but it is extremely strong for the first month of April. So here's on a monthly. You can see it again, right? This is a quarterly, and this is a weekly. And you can see here's that kind of trend line. We're likely going to come right back up here before we kind of, play around here and digest. But we're still snaking higher. Here is the yearly. I love this one. So Qs look very strong for the quarter. And what do I mean by that? When we have an expansion candle followed by a doji, so this was last quarter, ended 331. This is the beginning of the new quarter. So obviously we just started yesterday, and it was really, really strong. Thanks, Google. Thanks, Microsoft. Okay, so this is a really good way to start, but it's a very far away signal from the 10, this 10 EMA, which is really important. Look how tight it is. Even from 09, Morningstar reversal, tight, 10 week, inside the Keltner and inside the Bollinger Band and on the Keltner and 10. Look at the 10 EMA, hold it. Look at that. Now it's a breakout. Gets above, comes right back down to the 10. Look at that gorgeous close above the 10. Boom, right back up. Okay, that's yearly. We had a huge downdraft. Yes, we know about that. And then hot fire flames, boom. Look at this huge quarter. It's getting like, oh boy, now we're getting extended. Okay, we did it again. This is very extended from the 10 EMA, which is where it typically has hugged very, very strongly. So this to me is like, I don't want to call it exhaustion buying, because we don't know when it's going to exhaust, but it definitely has a feeling of, bullishness until it isn't, and then it breaks this 303.50, and it can be a very fast reversal down. So again, this is a yearly marker. This is a quarterly marker. We just opened up, and we've got some strength here. And this is our weekly, which I said yesterday looked like we were going to gap fill, and we did. So strong on a weekly, no question, but very extended from its mean. Say diamond's not as extended. This is like XAR and industrials and all that other fun stuff. So this did a fabulous job of tagging the 50 and getting above this trend line. When it will. When it comes and breaks this, that's going to be a high probability short. So right now this isn't as exciting, but because it's just breaking out, it's not as extended from its 10 week, but I like to have a reference point. And then IWM, well, we know what happened here, right? Small caps just caught in Fugo on November, and that is very obvious here. Broke out of this pattern, which is a little sloppy, but it doesn't matter. It's still a pattern, and just shot right up. But here's the 10 EMA. So very strong, 1, 2, 3, 4, 5, and now they're getting diminishing returns. Can you see the kind of like the expansion candles? Here's a Bollinger Band on a monthly. Now I'm doing this big picture because I don't care the time frame. I don't care if it's an hour time frame, a 15-minute time frame, a minute time frame. These Bollinger Bands and moving averages and trend lines still apply. And a reversion to the mean just means, okay, on a weekly, we gapped up and we're doing this, very strong, still in trend, and we're forming potentially, this pause, if you will, that either refreshes or retests We're definitely on a monthly huge expansion, and then it's gotten a little bit more compressed, right? In other words, it's losing some momentum. And if it does start to come back in, because it's very extended, that's parabolic, then this is where it likely heads back. So I just want to have those charts kind of as placeholders and maybe explain a little bit how I look at charts, and those who, are interested in maybe long and maybe have some levels that they want to protect against. Google, for example, that is gorgeous. So there's a daily gap up for earnings, and it held. All right, and now we had this, obviously, this explosion, held, and then we did this yesterday move of 4%, which was stunning. You can see where, here's the mean right back here. So it's getting a little parabolic, okay? And I did this from, lower levels so you could see literally even all this consolidation, it tagged, never went below this trend line. And look how tightly it has a relationship with the 10. That 10 EMA, and now look how extended it is. So personally, other than a trade, right, just be really careful, because this is exactly when stuff reverts. Everyone thinks, oh, it's a new bull market in Google, and then it's exactly when it reverts. This is very elevated. Apple already started to do it. Apple and Amazon both already started to basically get extended above the 10, and then 1, 2, 3, we're 3/4 of no movement above this 138. Here's the monthly, right? Tags comes back in. There's nothing going on here. Above is very bullish. Otherwise, it's inside, and it can just as easily fall back to 100. You'll see another one that looks just like it, which is Amazon. Here's Microsoft. I mean, literally. Really? All right. This is not normal. So we had a fabulous print yesterday. Cleared some channels also above this 232, which, by the way, is quarterly, is very bullish. Once it comes back in, you got a great swing short setup. Fabulous. You got a huge channel here to revert to the mean. Amazon is doing the same thing that Apple did, digesting literally 1, 2, 3, 4 months sideways. Okay, so you can kind of, here's your level, big picture, bullish above, bearish below. Now I know this doesn't do anything for your day trading, folks, but I have to show it because it's so like, ooh, ah. Look at, here's Tesla, 400. And obviously that was before its 5-for-1 split. But this is, I get it, very, very bullish. Above 7, let's call it 720, whatever, is continuation bullish back up, okay? But otherwise, if it can't get above this big picture this quarter, then it's more likely to fall. So it hasn't done anything wrong. These are great, bullish trades until they're not. And right now, on a shorter duration, I had already recommended last week, this looked fabulous for a very tradable signal. ARC and the top 10 list would be all but the China ADRs. You know about this. And if direction is firm into Thursday and plays are and these plays close above the 10-week on Friday, which, Friday we didn't have a trading day. I meant Thursday. Forgot that little detail. These should make nice swings. So they have already, if you can see this kind of action, right? Anywhere from, 1 to 3.5%. Well, I didn't even have the Momo stocks yesterday were hot fire flames. Let me go back to, now you can see hour, day, and weekly, right? So momentum stocks are now above the 10-week. That was a very big impulse for 3 days. I mean, that was wicked strong, which means value still is wonderful. Right into the Bollinger Band. And we're talking the safety plays. Like unbelievable, fabulous returns in just the past few days since I added this. These have been plays we've talked about for weeks and months, but I put them all together because I wanted to just kind of show that it doesn't matter if you're in momentum or value right now. They're both doing phenomenally well, which also means they're both at risk when we have a reversal. That's the thing that I really want to highlight. All right, so we know about the momentum plays yesterday, even while VIX was bullish, and I mentioned this kind of chart here with Google. that, okay, if it's not breaking down here, this is the next level if it takes it out. And sure enough, we opened at 2100, we opened at 2145. This is the weekly I was just showing, you know, on the last chart. I think that we're going to actually go into an area where this stays supported for the next week or two, and then we start to see it move higher. All right, there were so many plays, but right now in ARC Top 10, you can kind of see that even after yesterday's pullback, just take a look real quick. So we had some really big pullbacks yesterday while big tech got the nod, right? 3, 2, 2.5, all this jazz, right? And yet every single one of the ARC Top 10 that I suggested Wednesday morning pre-market are up big figures. It was just time. And the Qs are up 4% since recommending that in the morning on March 31st, right? So this is very, very much what I saw last week. I think it pauses now. Does that make sense? Like, I think we did a phenomenal move. That was Tuesday, and Wednesday morning pre-market, bullish NASDAQ, and in particular the ARC plays. They did great, even though I don't like the ADRs. And the reason I don't like the China ADRs, one, the charts, two, there's a lot of pressure right now to get the Chinese plays accounting standards up to snuff before they kind of risk getting delisted. And I also think that a lot of firms, the China ADRs are moving to Hong Kong exchanges, so it doesn't make a lot of sense for pension funds to hold such large amounts. And then Credit Suisse is already on the books for saying they lost, what, 4.7 billion on the family office there, Tiger Cub Archegos. And then you can see gold. I'm still bearish gold. This, by the way, for anyone who cares, this bullish percent index that I use is the most incredible tool I have found. I timed with absolute, I couldn't believe it. It registered 00 and I said bullish gold, it was $100. And that was, it turned out to be the absolute low in gold. And then at 100, it turned out to be the absolute high in gold. So not for nothing, but look at that, triggered 0 right here and triggered 100 right here. And so this is when I called it for clients and called it for clients. I've never ever seen this indicator be 0 and 100. Talk about amazing. And then this is a tighter formation of where we are right now. So until this trend line breaks, I'm not excited about gold. I still think we can be down here for another bloody quarter. Sorry. Bitcoin, that's different. You know, the new shiny gold. And then I'm watching for bonds to continue lower. You know about that. And gold to continue lower. You know about that. SC still hasn't triggered short, but man, oh man, it is just so extended. When it does trigger, it's going to fall apart.